right, let's begin with the big story this evening, which is the pre-Diwali bonanza, the stimulus. Yes, you can hear the crackers going off, even though the local governments are saying there shouldn't be any. But the festive mood is here. It's important, though, to take a deep dive into what the stimulus actually is. So, the Finance Minister unveiled a 12-point program, 12 sets of announcements in a pre-Diwali push to rev up the engines of economy. Importantly, she started with setting the tone, saying that the economy is improving at a much better pace than was expected, and in fact the Reserve Bank of India projects a possible return to positive growth by Q3 itself, that is 1 quarter ahead of schedule. First, let's listen in to what the Finance Minister said.
Moody's today have come out with the numbers for Indian economy, saying that earlier they were talking about 9.6 negative growth for India, which they have now reassessed and said that it won't probably be at 9.6 negative, it might probably just be 8.9 negative. Whereas for 2022, they had come with a very clear indication that India will be growing at 8.1% earlier, but now they've corrected themselves and said probably India will be growing not at 8.1 but at 8.6. So even these kind of assessments which are being made by agencies are indicating that there is a correction which is happening in a positive direction for India.
Right. So the announcements are interesting, and of course the details of all of them will be on your screen in case you have missed them so far. Broadly speaking, the big ones, the big takeaways is that there is a subsidy for the PF contribution of new employees for companies that will onboard them starting 1st of October. By new employees, they also mean those who have lost jobs in this period. The cap is for those who are earning 15,000 rupees a month and less. That's one big one to look at. The other big one, which should have a special mention, is the tax break for those buying or selling residential real estate, which will be increasing the gap between circle rate, which is a fixed rate by the state governments, and the actual market rate. Usually you pay the difference between the two as part of your income tax. That gap has been increased. Of course, there are a lot of other schemes. Credit guarantee has been extended for vulnerable sectors, for MSMEs. There are incentives for the agri sector, etc., and a debt platform for infrastructure projects. Let's take a look at some of these and how they really help. To help us do that, I'm joined now by Arindam Guha, partner at Deloitte India, Niranjan Hiranandani, president of ASSOCHAM, and Manish Sabharwal, chairman and co-founder of Teamlease. Welcome to all of you. I wish you all a very happy festive season since we're already in the mood. Mr. Sabharwal, let me begin by asking you about the incentive for jobs, because I think that's the most crucial one and the need of the hour. My question is it enough to actually incentivize companies and smaller companies taking on permanent employees registered under the EPFO scheme?
I think it is. I think this is not a new scheme. It was in existence for 3 years, and we did see the number of Provident Fund payers go from 30 million to almost 65 million. So are these new jobs? Is it a rebadging of, informal jobs to formal jobs? A wage subsidy is a nice way to sort of create an incentive for formal jobs, because India doesn't have a jobs problem. We have a formal jobs problem. And of course, a reimbursement program reduces the corruption. Even the US's payroll protection program is now seeing a lot of backlash because there were a lot of ghost employees and there were a lot of employers who didn't deserve that money. And now so in India, if you sort of introduced a program which would subsidize wages upfront, then you would lead to a lot of fraud. So I think the PMPRY is an existing program. It has been proven. It's a reimbursement program. So absolutely, I think it will be high. And, we have to recognize there's a 3 lakh crore shortfall in GST. There's a 2 lakh crore shortfall in income tax. And there are probably 2 to 3 lakh crore new NPAs coming down the pipe. So The US fiscal deficit is more than India's GDP this year, so we can't do things like that. So if we don't have the money, at least we can offer change. So I think today's set of programs, if you can't throw money from helicopters, which I don't think India can afford, then this kind of change is really important.
No, but Manish, I just want to get some clarification. You said this is an existing scheme already. So what is new and what has been announced today?
It was a 3-year program. It was in existence for the last 3 years. It's been extended for another 1 year. Otherwise, the scheme would already expired in March.
Okay.
It's called the Pradhan.
So it's been further
Mantri
extended
Protsahan
from the
Program.
month of October.
Yes.
Yeah. Okay. All right. I'm going to come back to you for more on this particular point, but I want to come to Mr. Hiranandani on the incentives for real estate. And we've been talking to a lot of people over the last few hours trying to figure out what is going to be the extent of incentive. Do you think that it's enough to move the needle for stuck inventory? Was the tax burden for that difference between circle rate and market rate really getting people not to go and buy flats?
Tamanna, we've been including your program represented that this section 43A is a stupid, idiotic section which should have been scrapped. However, we are very, very grateful that it's been amended, and it's amended partially because what they've done is that if the difference between the circle rate and the sale rate was 10%, it was Mafi. Now it is increased to 20%. However, many of the state governments have increased the circle rates or the other ready reckoner rate or the jantri rate, so to say, in order to collect more taxes. So the differential has in fact gone up rather than down. The second point, Tamanna, is the fact that they put a cap of 2 crores to the property. So a Delhi property in center or in South Mumbai property, even up to Andheri and others, if the difference was more, they would not be covered by this exemption. So that's the second problem. And the third, it covers only residential and not commercial. I can tell you about at least one property, very large property, where the transaction was concluded on a letter of intent in January of 2020, where the difference is 15%, and they did not close the transaction simply because of this difference between the ready reckoner rate and the actual rate. Now, under the circumstances, we thought it would be covered now, but commercial properties are not covered. So again, they cannot go ahead with this transaction, which is 15% lower than the ready reckoner rate. So in reality, it will cover. Let's look at the positive angle. About 65-70% of the cases in India on the residential side will be covered. So that is very, very, very positive. And we welcome it. We are grateful to the finance minister, the prime minister, and whoever else was behind it. But we are not happy that it is not done completely because many such transactions could have been more completed into it. And the second one was also very good. That is the 18,000 crores put aside for the Pradhan Mantri Awas program, where we have 1.1 crore houses to be completed by 2022. That program is working like perfect in spite of all the setbacks of the COVID. And hence, the 2022 is going to see the completion of the commitment of the affordable housing segment as programmed by the Prime Minister. And this 18,000 is for completing those houses. So I think they needed to do it if they wanted to complete that program. But I'm happy that they have declared it so that there is no doubt that that money will be there. Just to give you an idea about that program, to your viewers, there is a 3% interest subvention to those people who would be buying an affordable house in terms of less than 60 square meters and less than 45 lakhs of rupees and coming within certain time frame of completion and starting, which is required to be done. So that's an excellent program. Doesn't work in places like Mumbai and Delhi, but all over India, it's worked very well. So I think these are the two positive schemes that we are seeing today, but I wish they could have done this little clearances, which would, I think, would have been perfect. if they did it. And I hope in the budget she scraps this
So
section.
listen, it's not about saying what is, sure. It's not about saying what is positive and what is negative. Any incremental change will be positive. It's the pace. It's the pace which is the question mark. Mr. Arindam Guha, let me just take a leaf out of the book of how markets reacted, which was not with a lot of enthusiasm. Now, there could be other reasons like profit booking, etc. But the word on the street and the sense has been that why this drip irrigation? The fact is that we're going to have 2 consecutive quarters of a contraction in the economy. So, we are technically and officially going to be in a recession. We may have an improvement by Q3, 1 quarter in advance, but even the most optimistic people are not going to say that, you know, we've cleared the worst patch and that's behind us. Don't you think that we could have done with more of a boost at this point, or is that totally out of the question?
No, I think, we have got to be realistic. What we need to keep in mind are 2-3 things. One is, if you look at the fiscal situation of the government, what you would have noticed is that these stimulus packages are being announced in phases. Now, there's a reason for that. You see, it all depends on the revenue and expenditure balance of government. If you refer to the Department of Economic Affairs October 2020 report, you would have, I think what we have seen there is that there is a 20% shortfall in revenues vis-a-vis last year. There is while expenditure has been well controlled till now, but I think in terms of borrowings, we are almost, whatever was supposed to be the borrowing at this point of the year, we are above that, and that's expected. Now, what we are seeing today are the green shoots of economic recovery. And why do I say that? Because, if you look at the power consumption, if you look at the railway freight movement data, if you look at the index of industrial production, it's no doubt negative. But if you look at the subsectors which have moved from a negative to a positive zone, they were around 30 subsectors sometime back in April. Today, there are around over 100 subsectors which have moved into the positive zone. If you looked at FDI inflows into the economy vis-a-vis last year, they're about 13% above last year. So what that means is that as and when the government's fiscal assessment is changing, they are trying to channelize additional funds and liquidity into the economy. And where are these funds moving? They are moving into 3-4 distinct buckets, just like other countries. One is, of course, providing additional liquidity to the corporates so that the issue of bankruptcy doesn't stare us in a very large scale, and you don't have assets getting divested by promoters who are competent, but because of the economic scenario, they are not performing well. So liquidity support is a clear area of focus. Then you have an area of direct disbursement to the more vulnerable sections of society, which again, for most of the emerging economies and even the developed countries, that has been fairly standard. What I see standing out in case of India are 2 distinct areas. One is, of course, the production-linked incentive, which you referred to. And I think that's a slightly different twist vis-a-vis other countries, because what we are trying to do is kickstart economic activity in certain sectors. And we are not going for, we are doing it through a sort of an
Mr. Guha, the reason I haven't gotten into, the reason I haven't gotten into the production linked incentives is because right now we do not know what exactly those incentives are. As of yesterday, an announcement has been made that there will be production linked incentives, and allocation has been announced for those specific sectors. But what are those incentives? Are they really the kind of incentives which could be game changers? Is what we'll have to wait and see once those incentives are finalized. So I'm holding off on that for now. I want to return to Manish Sabharwal on the question of creation of formal jobs, because that really is the sore point for the growth of the Indian economy. And you and I have had the opportunity of speaking about this for years, Mr. Sabharwal. If memory serves me correctly, you have often said that formal employment is not generated at the pace it should be because there are larger incentives for smaller companies to have informal labor or contract workers. It doesn't work out for them to have someone on the rolls because of all of the other things and conditions attached. Is subsidizing PF going to be then enough to actually change that mindset?
I mean, you can't see it in isolation. We've just had a big dose of labor reform where 2,400 sections and 400. So I think that, in fact, I would see the labor reform combined with the education reform of NEP combined with agricultural reform, because that is really how you have to look at that. But when that labor reform combines with the PF subsidy, I think the cost, entrepreneurs in India for too long have concluded that the costs of formality are higher than the benefits of formality. I think we Indian entrepreneurs are reaching that tipping point where we are now saying that the costs of formality are lower than the benefits of formality. So yes, I do think that, see this Provident Fund plus ESI plus EDLI plus EPFO, this 40% wedge between Hathwali's salary and Chittiwali salary is a uniquely Indian sort of phenomena. And actually, it only is for low-wage employees. When you have 50,000 rupees a month, the law only prescribes a 9% payroll deduction. If your salary is 25,000 rupees a month, it prescribes a 40% payroll deduction. So yes, the regulatory cholesterol in India has been substantial, and our unemployment rate is number to monitor between percents and dependents. So I think that formal jobs are the only metric. I think formal employment is now up to 20% of the labor force and almost 45% of the non-farm labor force. So all of us walk around in the head with our formal labor force is only 10%. That number is now 20. And I think we're probably heading to 30, 40. So if we sustain this sort of regulatory cholesterol reduction, if we do a little bit more banking reform, if we do a little bit more civil service reform, I don't view this as, reform is not a bulb that goes on, it's a gentle sunrise. And you have to view it cumulatively from one thing combining with the other. So I think we are getting to critical mass. I think we have a China opportunity. There's China fatigue in the world. China has just announced a new plan which turns domestically. So I would say that, yes, formal jobs continues to be a problem. But I think we're starting to see these 6 reforms over the last 9 months combine to really not be a passing shower, but climate change.
Okay, and the kind of climate change that actually we want. Mr. Hiranandani, let me ask you about an honest sort of ground check, because a lot of the industries we speak to and corporate leaders we speak to understandably want to shed a very positive light on sentiment and what's going on ground. Are you seeing that in real estate? From the last couple of months, we've been seeing numbers with an uptick of sorts, registration numbers, etc. Are you seeing a real sort of climate change developing in the context of what Manish was saying?
I like the statement of being a climate change, but the point is very simple. Real estate's been going such bad times for last 2 years rather than just the 9 months that the green shoots which have come up are a welcome shower, irrespective of whether they're going to be there for long or not. I think number 2, that they are for the long term, unless we categorically, the market doesn't really support further improvements in the economy. So I'm looking at it very, very positively that the green shoots that we see today in terms of the last 2 months of real estate pickup is definitely going to grow, and it looks very, very positive. People are buying, they are borrowing money, home loans are at the lowest interest rates ever. And I think these things are giving a positive signal to the marketplace. People want, because of the work to home, they want to have bigger flats, they want to have better flats, they want the quality of flats, they want to live in societies where the comfort level is higher and having amenities. So we are not only seeing buying of apartments for the
Yes,
sake
but
of
true. But Mr. Hiranandani,
expanding.
but look at the rentals. The rentals have been going down.
Yeah, but
Sure,
that
sir.
doesn't
But I'm
matter.
saying the rentals have been going down. So would these people who want a bigger place not want to just rent out a bigger place?
No. In fact, the fact is, after this coronavirus, people have realized that they must go and buy a house ultimately, and they are buying on it. But yes, you're right. The younger people have been agreeing to stay on the rental issues rather than actually buy the flats. But I think a change is definitely getting seen, and more people, with the encouragement of the lower EMIs and others and longer period of loans. Kotak has just come up day before yesterday with an interest rate of 6.75%. Now, this is the lowest ever. So the earlier was 6.92 of the State Bank of India. So I think interest rates lowering and all these fact that you get a 20-year loan very comfortably, people would rather pay a little more EMI and buy an apartment than only rent a flat.
Okay. All right. Well, let's hope that there is more coming in terms of stimulus and it really helps rev up the engines of the economy. On that note, I want to thank you all for joining us on the first story, the first big discussion this evening.